Hey folks, Dan Frio here, the rate update. Today is, I'm going to say the date because this morning I forgot, March 10th, 2021, day that goes down in history. Why? The COVID relief bill just passed and it'll be heading to Biden's desk tomorrow to be signed. Woohoo! Don't go away, we're going to go cover that and much more next. For those that follow my channel, you kind of know how I feel about the COVID relief bill. I'll leave it at that because it is truly helping millions of people, but it's putting also the country, it's kicking a can down the road that eventually we're going to have to face this national debt. And when that pops, hopefully I'm old enough that I can retire and sit back and watch everybody else worry. So I'll leave it at that. So let's get on to what the market news is for today. And I'm surprised that this didn't have catastrophic results in the bond markets. So we see House passes the $1.9 trillion COVID relief bill, sent it to Biden's desk. That's the headlines. So what's happening with the mortgage-backed securities market? It's only down 6. I think, like I said before in my other videos, in the last couple days, especially last week, I think a lot of it was baked in. We basically thought the world was going to just completely end with all of this. And guys, we're at the end of the recovery. So that's one of the reasons why I don't think we needed a stimulus package that big. Don't shoot the messenger. I'm just giving you my opinion. I'm not this isn't a political channel. I'm just giving you my feedback on the financials and economics of us people, as well as the economy. Because when you overdo or you pump out this much money, it devalues the dollar and pushes up inflation because of pricing pressures on products and everything else. We have not seen the pricing pressure or AKA inflation ticking up yet, but we will. But I'll go over some of that good news here shortly. So right now we had the deterioration of the mortgage market throughout February. And that was a bad move. But now we're starting to get a little complicit right in this area here. That's fine with me, as long as we're not bouncing all over the map. I have people calling us daily freaking out. Dan, we're building a house. It won't be ready for May or June or July or August. I can't afford a 4% mortgage rate. Guys, I hope I'm not fear-mongering. What I'm trying to do is just give you the facts. Last week, when you see the mortgage rates deteriorating this quick, who knows where it's going to end? Everything always overreacts. The stock market, when it's plummeting, it overreacts, and then it'll come back a little bit. When it's buying, you have a correction to say, and you'll hear a lot of people saying, oh, it's just readjusting. So there's always these overcorrections one way or another. We saw an overcorrection here, and that's why I think we're coming down to a little more normalcy right in this range. So I really don't think we should be moving off of the levels that we're at right now, because the news is out. We know the stimulus package is getting put out there. We know employment numbers. Well, we kind of have a gauge on employment numbers, why I think they're going to be bad until September, because that's when the unemployment perks stop. And you're going to basically, at that point, force people to go back to work. So good or bad, it's you to judge. So what we follow on this channel is this number right here. This is UMBS. This is mortgage-backed securities. It's a bond that trades on Wall Street that is the biggest component of your mortgage rate. So when this number is red, it means the price. This is the price of the bond. When it's red, mortgage rates are going up. Okay, because you're paying less for the bond. When this number is green, that means mortgage rates are getting better. So red, bad, green, good. Okay, over here we have the 10-year Treasury. There was an auction that came out today, was okay, but it wasn't absolutely terrible. And we saw that last week with the 7-year that went to market, and it was terrible. So the 10-year went to auction today, wasn't bad. You can see the S&P 500 was up. So stocks were up, bonds were slightly down. I'll say negative. I'll take this as a 0. Okay, so basically the market was pretty flat today. There wasn't any really economic data that came out that spooked the market. So what came out today is consumer price index. That is the gauge of inflation. Consensus was 0.4. We came in at 0.4. Again, Nothing to worry about there. Consumer price index, ex food and energy. A big component or a big thing that's one piece of this puzzle that is inflating right now is energy prices. Oil prices are going out the roof. You might see gas prices in the last week or two went to levels we haven't seen in a long time. So you strip out the cost of food and energy, that inflation piece, we're actually down. So that's a good measure there. Consumer price index, year over year, the assumption was we were going to be about 1.7, and we came in at 1.7. So see, guys, there's no shocking numbers in this system. Tomorrow we're going to have initial jobless claims and continued jobless claims. That's going to give us a good factor there. And the JOLT index is basically how many jobs are available in the market. And there's the tough thing is you'll see that the employment, there's 10 million people out of work. But the crazy thing is when you see the JOLT index, we saw it last week, is there were 6 million companies looking to place or fill job positions. So there's a lot of job openings as well. So that's good news. What happened throughout the day today? It's just not a stagnant day, and this gives us a gauge of where we're going in or how we're floating into tomorrow. So we came out of the gate and got crushed, and then we recovered some. But we recovered, and the good news is, let's assume basically nothing happened today. Okay, at one point we were up 17, but we ended the day down 6. Okay, that's a big reversal, and that happened right in here. But as the day progressed and as we ended the day, hold on a minute, let me go the whole day. Okay, so we opened here and we rallied and then dropped and then we ended up here. Okay, so let's see where we are here. We had continuous buying right here, overbuying here, which is a great sign. Then we had a little bit of profit taking, but we ended the day on these green candlesticks, and a pretty big one. So that means tomorrow, if everything goes kind of as planned, we should flow into the market on an upward trend, and that would help the markets. However, these jobless claims are starting to come in between 6:45 and 7:30. Information is coming out. So I don't expect these numbers to really shock anybody. So I'm not assuming that we should have any change here. So if we're stagnant or we continue this rally into tomorrow, that's nothing but good news for mortgage rates. Now, I post every day what the national averages on rates. So let's go into that. 30-year conforming, jumbo, FHA, and VA. These are just to compare what you're being offered with the national averages. So you could say, wow, I'm above the national average. Why is that? Or I'm below the national average. Now, if you deviate from these numbers in a big way, for example, if you come back and say, Dan, I just was offered 2.25 on a 30-year fixed conforming loan, please be careful. And here's the thing that most people don't do. And I just had family members reach out to me and say, hey, Dan, here, what can I get for this? And they actually got something in the mail from somebody, and they're like, can you do this? And I got it, and I'm like, do you realize you're going to pay $12,000 for that rate? And I can give you the same thing, and the rate would be 3/8 higher with no fee. So basically your break-even point on the two, you would never have a break-even point because my $895 fee versus their $12,000 plus another, that was their discount points, meaning their points to buy down the rate. They actually had another like $1,500 in fees. So it was like $13,000. I'm like, your house would be paid off before you would even break even to what I can get you and what that offer is. But it stunned them when they saw the rate, that they looked at the rate and they're like, whoa, that's fantastic. Watch, there's a catch. That's why I post these national averages now, just to make sure you guys are aware of what you're getting. Now, if your rate is much higher than this, be cautious because you might be being taken advantage of. So that's just what I'm getting here. But again, this is an average. So some people are going to have a little bit better rate. Some people have a little bit higher rate. Depends on your credit score, your loan amount, the type of property you have. There's a whole bunch of factors that are involved in this piece of the puzzle. But let's go through where we were a day ago, a week ago, and 4 weeks ago. This delta means change. So in one day, rates went down 2 basis points. Well, what is 2 basis points? 2/100ths. So this is 10th, 100th. So when you go 3.19, this means if it's down 2, this means yesterday we were at 3.21. Hope you get it. So you take 2 away from the 19 or add it to that and gives you 21. Okay, so this is basically an irrelevant move. We need 12.12 here or higher to really change the rate, because most rates trade or are registered on eighths. So this would be 3.125, 3.25, 3.5, and so forth. Not trying to get you confused. But 7-day, we're up 6 basis points, 3, 8, and 7. Really not that much. The shocker is where we were a month ago. So rates are up 3/4 of a point almost across the board from where we were a month ago. The good news is we are 3/4 of a point below, on average, where we were a year ago today. So if you go here and you see, well, most of these rates were right in the 3.8 range-ish, and we're about 3.2, 3.3, say, in this range here. But on average, in all the studies that I'm going through, we're about 3/8. God dang it, here, let me show you the market update, just to give you feedback on that. We are, where to go? 3/8 lower than we were last year at this time. Just so so that can back up my claims there. Okay? So there's other things that I study. I won't go through this with you because it is way too in-depth and I don't want to lose you. This channel is basically to give you the fundamentals of all this stuff. But these are trends and all kind of other things that I follow to give you guys my best analysis of what the future may bring. So that is it for today, guys. I ask you 3 things like I do on a daily basis. Please give me a thumbs up. That helps the algorithms get me noticed. Click the bell. Every time I post a video, you get an alert. And just subscribe to the channel. By you subscribing, that tells YouTube, hey, this guy's got a lot of people subscribing. There must be something there that can help others. So that's all I ask you to do. If you're in the process of building a home, buying a home, refinancing, or you're in forbearance, what I ask you to do is you're more than welcome to get another quote or 2. But at least call us. Think of me as I'm a mortgage company, guys. That's all I am. But we offer you personalized service. You call in, you're going to get me or one of my loan officers that we've all been doing this at least 10 years plus. Almost every file does funnel through my desk so I can review it for the program, the rate, the fees, make sure you're in the correct program, and so forth, and check it for accuracy. So that's what we do. So I ask you to, please reach out to us for a consultation, especially if you're in a forbearance. We want to give you the exact exit strategy on what's best for you. There is no cookie cutter program to say, refinance. Well, refinancing might not be the best thing for you. Your current loan might be the best thing for you. Most loan companies are not going to tell you that because we make money by doing your mortgage. I don't make any money by telling you, hey, keep the loan you have. But I'm also here to put you in a better financial position. So if a new loan doesn't do that, we are not going to do the loan. So how do you reach out to us? The best way to do that is, here, let me get to my channel. Go to therateupdate.com. And hey, for those out there that don't really know, they haven't checked out my channel, check out my channel. I have over 700 videos here, and they cover all kind of topics. And there it is. And I also do the opening bell with Dan Frio, and I talk about stocks, cryptocurrencies, real estate, and all kind of other stuff. But if you need a consultation, you can do a few things. You can go to the website, therateupdate.com. Go down here. This is our 800 number, 844-775-LOAN. It's 844-775-5626. Or we have a new scheduling platform where you can schedule an appointment, a 15, a 30, or a 60-minute meeting with us. We usually do this over Zoom, so you can share your screen, I can share mine, and we can go through the numbers with you. If you're like, Dan, can you look at some stuff for me? Can you look at my mortgage statement for me? Can you help me? How about if I can just email you a question? By all means, email me. My email address is D for Dan, Frio, preferredrate.com. But here's all kind of other functions here that do. If you want to apply for a mortgage, the best way to do it is click here. This will take you to our mobile app. You can do it while you're at work, while you're walking around, while you're sitting at Starbucks waiting for your coffee. And you can also follow your loan through the entire process. This is the number one way to do this. However, if you're like, I just want to go onto the web and apply, you can do it right here. This won't give you all the functions that the mobile app will. But if you're looking to buy a house and you're just like, man, I really don't know what I'm doing, what questions to ask or anything, hit the home purchase qualifier. This will go through about 12 or 18 questions with you. Based on the answers, it helps me determine the best possible program for you. This is the tab that does the same thing, but for refinancing. Or if you're like, you know what, I just want somebody to call or correspond with me via email, just click to get a free quote. We'll get an alert. One of us will be on the phone probably within 10 or 15 minutes to get in touch with you to answer any and all your questions. So that is it for today, guys. I want to thank you for watching. Thank you for helping my subscriptions and views go out the roof, because without you guys, it's not possible. So God bless. I will see you tomorrow morning. Take care. Bye-bye.